All right, let's talk about your current trade you like this week, what you're looking at right now. These are a little further out, so.
It's gold, Jerry. Are you a Seinfeld guy? It's
Yep.
my Kenny Banyan there. It's gold. And I know this is, and part of it is going to, when I say gold, everybody's going to say, oh, this is a trade that is everybody's in. How can you say you just told us that you like to avoid the crowd. You like this is still not a crowded trade. Precious metals have been one of those things that have been saved for, the not the elite, but those traders that just don't like to get into the metals, or traders that like to get into the metals market. That and oil are one of the smartest trades out there. When you look at the actual futures on the commodities, man, the money is smart and they're already there. Right now, we're still getting retail investors that are involved in gold. And you remember when Costco started selling gold coins, 2 years ago now? I mean, that was kind of a sign that, okay, this is really going to come to retail. But when I look at it, remember the fundamentals, I care about more with gold because the fundamentals are a little more direct. And when you look at it, you've got central banks that are continuing to buy at the largest rate historically that they ever have, right? We've got inflation that may be making another return here, whether it's the tariffs or whether it's just we've got a trend right now. When you hear that we're going to get rid of inflation, it doesn't happen. We can get it down to 2%, right? But that's a hard road to get it back down to 2 or sub 2. We're not going to see price. Let me put it a different way. If we see prices starting to go lower, that's a big problem because that means the economy is falling apart, right? I mean, if we actually see deflation, that's going to be a problem for us. That's a bigger problem and we don't want it. But inflation's still remaining heavy and people are getting concerned about it. We've got geopolitical events that are still very much in the market's view right now. And you've also got a little bit of a rush to assets. This is something I started writing about just yesterday it was Monday. My gosh, it's Wednesday already. Bitcoin is decoupled. When you look at the correlation between Bitcoin and gold, typically it runs right around 80%, 70% or so. We have seen this drop and actually go negative over the last couple of weeks. Whenever that's happened, you've always seen a run back into gold because gold is a wealth preserver. Bitcoin is a little bit of a wealth preserver, but it's more of a speculative interest. People buy Bitcoin because they think it's going to go higher, not because they want to protect what they have. So this disconnect that we've seen between Bitcoin and gold here over the last week or two has got me concerned about what's going to happen with Bitcoin. You look at that 85,000 level on Bitcoin, and I think if we crack back through that again, we're going to have some bigger problems. But it all leads me back to gold. GLD is the way that I choose to trade this. If you look at it, the 50-day moving average is in a great uptrend. We just had a 10% pullback from those highs that we saw in October. That's what I call a healthy correction. That 50 days still moving higher, and that trader's trend line just started to move higher as well after this consolidation higher. We've broken that lower highs, lower lows, and getting ready to take out that 400 level. This is going to be a case where it's going to be another FOMO trade. I either buy GLD right now, Ryan, or I already mentioned I like to use longer term options. I start to look at the June options on the GLD, and I buy those at the monies around the 390s, maybe a little in the money on GLD, and I simply let this roll. I've been doing this trade for the last year. When the GLD goes up about 20, 25% or so, which is a big move for gold, but it's happened over and over and over, I'm getting 110 to 120% off of that same option leverage every single time. And one of the reasons, and this is something that is true only for the GLD as far as I've seen, is the volatility is so low on the underlying that these options are cheap. And I hate using the word cheap. Let's call it a value. You're not paying up for these options. The bid-ask spreads stay really tight even when you go out to June. And that's because everybody looks at gold and says, I'm not going to get burned by an earnings report. I'm not going to get burned by some product announcement that went wrong. It's just gold. That's my favorite one right now this week.